It's so exciting to go live to talk about mortgage related content and interest related content. So, I mean, people are probably at home just cheering this on, and
Yeah, definitely.
I mean,
I mean,
definitely.
25, it seems pretty likely we're going to get, something like 80% of economists are saying 50 basis points. I'm a little bit more cautious, but I keep going back and forth between 25 and 50. I think it's likely we get 50, but I think there's a chance that the Bank of Canada just gives us a bit of a surprise here.
Yeah, I think that I'm on the record for saying that our natural overnight rate should be sitting around 2%. So we have still a way to go. That why not just rip off the Band-Aid? Similar to when interest rates were hiking up to curb inflation, it was like, well, why not just slap one on there? And they did. They went a full percentage point at one of their BOC meetings, and I think that we're ready to do that. But with that said, inflation crept up. We have to keep inflation in line. We don't want to just play a kind of yo-yo game. But let's get a little taste of Christmas. 2 weeks out from the big day from Santa, so a little 50 basis points cut. It will have a really good impact and lay the groundwork for next year.
I'm getting some questions on where's my bow tie, but I have a question for everybody else. Is it going to be 25 or 50 basis points? Put it in the comments. What are your thoughts? It's coming up in less than a minute here, so get it in there quickly, and we'll try to react to some of that.
Yeah, 75 would be a shocker. I wouldn't know where the data would come with that, but I mean, 75 now and 25 in January, and we are well on our way. To a good spring market for real estate. That's what we're focused on: real estate and mortgages. That's what we want to see. We need
Vaughan,
more affordability.
Been announced. 50 basis points by the Bank of Canada.
All right, pop the champagne. It's time to party.
It's Christmas, I would say.
Yeah, I mean, no surprise. But this time last week, 25 basis points was sort of very reasonable. And then near the end of last week, everything started to shift when those employment numbers. And we don't ever want to cheer on high unemployment. That's not what we're here to do. We're not excited about high unemployment. We're just excited about lower interest rates for mortgages.
Yeah. So the economy, a couple of things from the press release here. The economy grew by 1% in the third quarter, which was below essentially what they were expecting. Let me just do this. So below what the economy, below what the monetary policy was expecting. Also, in this second paragraph here, the unemployment rate rose to 6.8%, so which has continued to grow more slowly than what the Bank of Canada had predicted in. Oh, that's not the right one. Let's get the right policy here. Where is it, Vaughan?
Vaughan was the winner. I think that's what Sean was trying to say. But I've been aggressive on it. I think that we need to continue to be aggressive on it. But obviously, we have to look out for inflation. But I don't know that we're going back to high inflation as long as the government doesn't keep handing out money, which I think that they may be done with.